team here. Today's April 20th, 2018, Friday. Hope you guys had good week trading this week. As I record this video, market should be open another hour and a half or so you should be seeing some lights on your left. Today we're going to be talking about Spider, Diamond, IWM, Qs, Apple, GLD, and SLV. We'll call it a day. Welcome to the market update. Let's kind of pick up where we left off. Last week we talked about we're going to follow up some of the levels we talked about. Well, first, I think what we talked about last week, which was very, very important. Last week was when was last week? That was 13th. So 13th was this day, right? This right there. So that was 13 right here. So let's make it more interesting. That was 13th right there. So what we talked about last week was we wanted to see some of these gaps remains open, right? You want to see some of these gaps. We looked at 65-minute chart. We're going to look at 65-minute chart real quick. But before we do that, I want to talk about some of these levels. And I haven't changed anything on my chart here since last Friday's market update video. And also we talked about how we talked about these gaps, right? We talked about how we want to see buyers starting to fill these gaps, these downside gaps. And we also talked about that these upside gaps we have, it is important that we keep these gaps open so the buyers can keep this short-term momentum going, right? So we've done that. This gap is still open. Some of these gaps here, they're still open. We're gonna look at 65 minutes and we'll talk about it a little bit more. So that's a good thing. And we also talked about that if the buyers get up and fill this gap, we talked about how a lot of times when the gap gets filled, especially it gets filled, it's a downside gap and the market gets up and fill that gap, it acts as what? Short-term resistance. And so we filled it, a little bit of doji, we pull back. And you know, I kind of wanted to see this kind of a, you know, island reversal holding. The thing about it is, you know, I tweeted out this week that, I don't know, Wednesday or something like that, or Monday or Tuesday, I tweeted out how if we can keep this gap open or sustain, then we have that island reversal, which is a bullish reversal pattern. Well, that gap has been filled, so now we no longer have island reversal. But good news is this was a good trade, I think, from the buyers. So buyers kind of had to go and kill this selling pressure, so they got up and filled it. But they realized they didn't have enough momentum built up, so then they had to give some away to the bears. So then this gap was initially filled. But I think this was important that buyers fill this gap. So this gap is now filled. So you got this gap, and we got just few other gaps. So once the buyer starts to fill this gap, I think that will be a good tell. And now that the bears are coming down a little bit here, we want to make sure buyers are protecting these gaps. So these gaps can turn into like a breakaway gap, right? You can see these are breakaway gaps, and that turned into this kind of a massive downturn, right? So now if we can turn this as a breakaway gap to the upside, we can maybe possibly turn it into a massive bullish run. Again, let's take it on a day-by-day, week-by-week basis. But I think it's a good sign that this gap has been filled. At least we killed one side downside pressure, and we got 3 more gaps to go for the bulls, right? Let's actually go to 65-minute chart. And I haven't changed anything on this chart. So we talked about this Fibonacci level here. It's very interesting to note that this Fibonacci I drew, I haven't changed it since the last couple of weeks, and you can see where it came up to perfectly to that 138.2 expansion level that is coinciding the gap fill area. Isn't that interesting how these levels kind of tend to, so when you start to see these technical level colliding, that's a level to pay attention. So anyway, and then this thing came down here. Now we're retesting this neckline, right? So we talked about last week that if we can get above the neckline, there will be initial confirmation. We did that. I said initial because a lot of times, you know, when you break out of these levels, price likes to go back and retest them, right? And then if he bounces up and creates another higher high, that will be the level where I can categorize this as a full confirmation. So right now, we have the initial confirmation of this inverted head and shoulder pattern, this out of this consolidation, and now retesting phase. Another thing that I want to talk about is I want you to be lenient on with your support levels, right? You can't be like drawing this. This is what newbies do, right? This is unseasoned, untrained trader. They don't know anything about technical analysis yet. You know, they just looked at a few things on Twitter and they'd be drawing like this, right? They're like, oh, this is important level. And then let's say on Monday, we see something like this, right? And then they'll quickly say, aha, that's a short signal. And then they'll short it and this thing goes right back up. How many times you've seen that? How many times you've became a victim of that? I'm sure all of you been there, and I've been there in the past, right? Because you don't want to be so fixated with these lines. You want to be lenient with this because it could be like this. What about this, right? What if this thing came down, right, and then bounced? That's still a support. You can see that right there. So you want to be lenient with that, and you don't want to be so fixated in one level. These are just you know, vicinity. This is a reference point. This is why it is so. A lot of people doesn't understand how technical analysis works. Just because you draw a stupid arbitrary line doesn't mean it's gonna become a support. You gotta understand the vicinity. It's a guidance. It's a guidance. It's a reference point. So, you know, so that's something that I always emphasize, that you don't want to be so fixated on the levels because market knows where everybody's looking, and market is so you know, savvy at, you know, taking your stops out. And a lot of times people put their stop right there and maybe go long there. Take your stops out and reverses right against you. So I think looking at the 65-minute chart, I mean, definitely this was the consolidation. We broke out. We have this micro term uptrend in development, right? We got the higher lows and higher highs. So that could be a good sign in the minor term. But again, looking at a more bigger picture here, first things first, I think this is a victory from the buyers, in at least for now, that we fill this gap. We cannot afford to, you know, the bulls cannot afford to have these downside gaps remain open. So we feel that, pulling back, and now we're retesting some of this. There's a gap right here. You see this? There's a gap right here. And so this gap right there is actually slightly open. Here, that gap is, here I go to 65-minute chart right there, is this gap. You see? This right there, I can even draw like this. This right there, this gap remains open for now. So if I actually go back to daily, that's what this is right here, right? So, I mean, would this be a bull flag before going higher, or are we gonna fail, start coming down and filling this gap? It's tough to say. I would have to say 50-50 at this point, you know, for the fact that we're still kind of in this downtrend type of environment in the minor to intermediate term, because we do have a lower high. We have a flat bottom, we got equal lows. So it's kind of a 50-50. I mean, looking at more of a minor term, micro term, looking at more 65-minute chart, I guess I could say, looking at this, it could be, okay, so we do have a higher high. Could this be sustainable before making another higher high and higher low? Or is it a flop? Is it a trap? Is it a shenanigan before coming all the way, then filling this gap and then shaking hell out of it, everybody? So at this point, it's tough to say, right? So let's follow up next week on that. Let's see how it plays out. I mean, I think at this point, if we can sustain this gap, though, if we can able to keep these gaps next week, we may see another run up and fill this gap, which is coinciding what? Coinciding with this downtrend resistance, right? So that probably gonna act as resistance. Another scenario, which is a best case scenario I think possibly could do, is market kind of gets up a little bit right here. And I've seen this happen a lot, especially in the primary term uptrend, and the one the market is really finally ready to like jumpstart and getting into a next gear, is you gap up, market gaps it up, and then just gets up to maybe like here, this resistance, and then fall back and then get up. But important level is just gapping up. This is what I call jumping over the fence, right? It doesn't want to deal with the fence. It gaps out. If we see something like that, I think that would be a good jump start to bring it up. Again, I'm getting kind of too ahead of myself. So I think the level to watch next week will be 266, 263, and then 271 and 273. So those are the levels I want to see as a bull. I want to see these gaps remains open. If we can do that, I mean, we lost island reversal, but that's okay. This is important level right here because there's a prior support, prior resistance, and now potentially a support. So let's see how it plays out. Let's go to Dow. I wrote a journal post yesterday, right? And I went long right there. So yesterday here, and then we're pulling back, but let's see here. Let me go to, so we're just about here. Let me draw a double line there. So we're trying to find some support. Obviously, we got this resistance there. So obviously, for diamond, it filled this gap. That's a good sign. And then now we're pulling back. It's similar story here. We kind of cluster here. We broke out and now we're retesting phase. So that's important level right there, right? That's a prior resistance support. So pretty similar look to Spider, except the fact that Spider is still below this falling downtrend resistance. So this tells me where diamond is actually, as far as a pattern, this price action pattern is concerned, it has actually a little bit more edge to the upside because we don't have this downtrend resistance. Just because we got slightly above it, that doesn't make it like this thing is ready to thrive. It's just there is another kind of a prominent resistance like Spider, because Spider is like somewhere here, but diamond obviously we've already kind of a little bit clear there with this gap up, but that quickly got filled here. So let's see if we can find some kind of support somewhere here in that vicinity, and then let's see how it plays out next. We got some, if it does get up here, we got some resistance up here. So let's see how it plays, and we'll follow up next week. Russell 2000, obviously Russell 2000 is a leader of the pack. You can even see right there. I mean, the Nasdaq, and this is what anticipated. The Nasdaq is going to show relative weakness versus other indices, and you can see Russell 2000 is showing relative strength versus the Nasdaq, and then I guess Spider and Diamond sandwich in between. And that's something I've anticipated this year, that the Russell is going to lead the entire market. I think Russell is going to lead this year, next maybe, like a couple quarters next year. And I think the Nasdaq is the one what's gonna weigh the market down. So obviously you can see, and you can really see it in price action. We're actually right there. You already see in the intermediate term, Russell 2000 already in an uptrend. We're still in a higher low, so we're still in an uptrend, right? And then you can see kind of got equal highs there, and we're nowhere near 50 or 20, right? And the Spider, Diamond, they're all near 20, but you can see Russell 2000 is showing much strength there. So I think if he continues to lower, this is kind of important level there, but potentially a bull flag, not sure at this point, but we'll see. We'll kind of follow up here again. There's a long-term chart I've done on my post, Russell 2000 post, and talks about how long-term picture looks really good on the Russell 2000. So I think obviously these are the levels that he needs to kind of break out of. So you could kind of take some time here. I think again, Nasdaq is what weighing us, all the indices, right? Nasdaq is weighing us. So I went with calls yesterday, hoping that this gap wasn't going to be filled. Well, it filled. Doesn't mean I'm going to be getting out of my position. I'm not a day trader or swing trader. You guys probably know that if you've been following me long enough. So now the gap has been filled. That kind of a short-term, minor term, the momentum kind of has died. But I think that's a good news that this gap is also filled, right? So that downside gap is filled. Only gap is open is this island reversal. So that this gap is still open, but this gap has been filled. That's a good sign. We pull back. We also got filled this upside gap, but we still got these gaps that's still open here from here. So that's a good sign. And I think here. This is 2 level, right? We got congestion zone there, right? We got the prior resistance, prior support, kind of all around it, resistance. We're back at it here. So I think 161, you know, let's be a little bit more lenient. 160 in the minor term. Let's see if we can hold this level. We do have a kind of a, you know, you do have a minor term, maybe higher high here, maybe higher low. But again, if these things start coming down hard, then potentially, because there's a gap here. Let's see if we can keep this gap open. If we can keep this gap open, then we can maybe take this into as that kind of breakaway gap. Let's see if we continue to lower, retest the gap, and then get up, right? If we do see something similar to that, then if we get gas up here, either it's kind of gonna come down here or come up here close to the gap, or what we want to see, what the buyers want to see is that want to kill this downside selling pressure, right? So we want to go up here and fill this gap before coming back down. So let's see, we'll follow up next week and see how it plays. So let's look at Apple here. Apple, what I wanted to talk about Apple, and I've been talking about Apple, and this is the reason why. And again, I haven't taught, this is a see, it's grinding, but it's just still is not able to nullify it. It's still coming. There's still, it's just hectic situations for Apple here. Now that we're kind of cultivated lower high right there, you can see we got the lower high there, and we are currently trying to hold that weekly 50-week moving average right there, but it's kind of a concerning signal. But again, we could still, it's not too late for, if we can kind of consolidate here for a while, right? Without really pulling back, before kind of getting back up, that's a possibility. And I said before, I am secretly hoping that, this will come to 135 or maybe 140. I'm not saying that's going to happen, but if we do see it, I think that would be a good level to start accumulating possibly long-term calls and, maybe even shares, right? And so I'm not sure at this point, but it's not as potent as 2015 or 2012. 2012 has the most potent bearish. This is the most potent bearish divergence I've ever saw in my trading career, right? And then that thing pretty much tanked pretty hard. 2015, not as potent as 2012, but it was there, came down, not as hard, but you know what I mean? There's some cushion there, up and down, finally got up. And this one is grindy, so it's not as potent as this or that, but it could still come down. So definitely a cautionary signal there. A few more, I'll let you guys go. Gold. So gold is still stalling here. We're kind of consolidating. I'm not sure. See, stalling here is not really a good thing. Like, I mean, we got up here, we kind of consolidated, trapped a lot of body, and then got back up, but that thing pretty much tanked here. So either this, because when the prices start to tightening like there's a lot of volatility, there could be a lot of fake outs. It could fake to the upside like it's going to go and then come back down, or it could fake out to the downside, it's going to come down and it gets right back up. I think that was the kind of the fake out right here, like right there. You see right here, bulls attempted to break out. You see that long lower wick, and I thought, and I was watching it closely, and I was wondering if this thing was going to really bring things down, but actually bulls kind of got back up, and we're still consolidating phase, so bulls are not completely backing down. So I'm starting to see slightly bullish, still long term, but in the minor term, we talked about monthly chart last week. That monthly stochastic was positive and showing kind of a bullish signal in the long term, but like a minor to intermediate term, still hectic situation. Silver though, we are trying to hold here, this big gap, right? But the thing about it is we are in this downtrend right there, so it still needs a lot of levels it needs to get above. We're technically not in downtrend uptrend where we are making higher lows, but we're making lower highs. So we're kind of in this symmetrical triangle. But on the monthly, on silver, kind of like where's my monthly? Kind of like gold that we talked about last week. I actually thought that there's a chance that this could roll back down, but with the recent pop, right? Because of this pop right there, that pop right there, that kind of helped to bring this thing. It looked like it's gonna cross back down, and then we are getting back up. So that's a good sign. Another good sign is instead of this thing coming all the way down to the bottom of its span, right? Then it will be still in a downtrend, but it stops short in the middle, and then we're trying to get up. That will be like a very, very early stage, like, you know, premature stage before cultivation of a primary term uptrend. So obviously, let's say if this were to play out, you would see this thing getting up and then kind of oscillating back and forth at the top of its span. That's how this thing, and then, you know what I mean, this thing kind of getting into an uptrend, right? So there's something there. It's just still need kind of a one big pop, just authoritative move, something like that. But before we see it, I can already see a lot of big people are trying to, because there's a lot of attention on gold right now. A lot of people are trying to time this breakout, and I'm telling you, there's gonna be a lot of shenanigans, a lot of head fake, a lot of flip flops, a lot of head fakes, and it's either gonna like get up and look like it's gonna like, you know, break out and come right back in, or it's gonna like come down and it's gonna look like it's gonna break down and then get up. Something like that. So I don't know exactly how it's going to play out. So I would suggest you stick with the kind of a longer term chart to kind of monitor and not to be so concerned about these minor term movements. I think kind of a, you know, patience is required. But like I just done like about monthly analysis, there is some, you know, there's some positive signal there on the monthly that could potentially could turn into something, but we will need more substantiation from the price action to conclude that that is what's happening. So that's everything for me. So you guys have a wonderful weekend and good luck trading next week.